Okay, Samantha, a little bit of a percentage confidence on your feeling that we could be going higher, albeit choppy. And again, you mentioned some of the reasons, but could you go over some of the reasons you think we'll get that type of action this week?
Yeah, to clarify, I'm looking at 29.75 for SPX, and that I believe will get rejected. So I'm expecting I was only bullish into Tuesday, which is tomorrow, and then we pull back. I do a lot of intermarket analysis, which is relationships that show the undercurrent, if you will, underneath the price action, and they are telling me big divergences. We have not retested the lows. I have reason to believe that the bottom is not in. The chance of actually moving above 3,000 to me is highly suspect. I know we've got 8.5 trillion between the Fed, Treasury, and Congress of liquidity, etc. But I'm not someone who is expecting this to recover all-time highs. So it's been I love being bullish into earnings and trading these vaccine stocks as if they're internet stocks from 2000. But I am not someone who is at all expecting a vaccine. So when I first, glommed on to this coronavirus risk, I actually became obsessed with it. I'm a bit of a geek and a researcher. So I kind of like disappeared for basically a week. And came out with an article on January 28th that was entitled Coronavirus, Perfect Storm, Coronavirus and Market Risks. At the time, there were only 2,000 cases, recorded worldwide. But the point was, this to me is not going to be fixed. We have to learn to live with it. I think these lovely vaccine speculative stocks are a heck of a lot of fun to trade, but they are not investments. I believe that we are going to have a sputtering, if you will, of economic, activity, opening and closing and all kinds of, sputtering. But I do not expect growth to expand. I expect it to contract. So with that, it's very hard to be, from a fundamental basis, bullish. From my intermarket analysis, which helped me spy this complete, rollover on February 18th, it still says it's not done going down. So I can definitely trade on a smaller time frame, which I'll talk about, tomorrow, the chase, the swing, the trend time frame. But it's not enough just to have price action for me, or even the headline, if you will, of vaccine. I want to see underneath what's really motivating this rotation. And for right now, yields popping is a value play. In other words, momentum quiets, and the oversold value plays percolate. That whole thesis of energy, when we have commodities, when we have inflation expectations, pull up the yield, which is right now up 11% on the 10-year, it pulls up commodities, which again, my thesis going into Tuesday, that we had short covering, unlike the May expiry of the futures, of the June futures, we're going to need to unwind that, and then we can go back down. So that it's another reshort for oil, it's a reshort for the market, it's whack-a-mole as far as I'm concerned. These are a beautiful potential trend reversal in value plays, meaning small caps, maybe regionals. That's why your home builders are doing well. So this oversold, in some cases left for dead, like the retail, which has a beautiful chart, by the way. These are definitely nice plays, but I do not believe that they are, that the market is safe.
Right. Well, you make two good points off the bat. You got the 200-day moving average at around 3,000, so that could be an impediment. And the other thing is the virus stocks like Zoom, Teladoc, and Peloton. They're all getting hit pretty good here today.
Well, they're not the virus stocks. So those are the work from home stocks. We have a new economy. Yeah. So the cloud plays are being bid up because of the whole new culture of working from home, and it's not going to reverse automatically, as you can see from Google and Twitter and such, going, okay, we're actually going to, in Amazon, you guys are going to work from home, and that's helping this rotation into the cloud and the tech plays. But the vaccine plays are different. The Myrna, the Sereno, whatever it is, SRNE, that's up like hundreds of percent. This is total speculation, and it's going to disappoint, in my opinion, but they're fabulous chases for sharks who smell the blood and want to make some coin because they're up so much. I've been tracking these since February. So this is what I mean by vaccine plays are separate from work from home plays.
Tomorrow at 2 p.m. Eastern Time?
I'm going to be talking about time frame congruence, which is just a fancy way of saying that patterns emerge on multiple time frames. For some, they are day traders. You know, they're looking at a 2-hour window versus 2 days in a trade, 2 weeks, 2 months. What I'm doing is I'm actually putting, you know, different charts side by side to show the power, if you will, of moving from the inside out and vice versa, so we can structure option tactics based on direction, volatility, and time. And this is why I deem it the chase, swing, and trend trading with options. And I'll show you how I do it, and structuring also the strike prices, the position size, the liquidity, everything that I'm looking for basically in an options trade based on multiple time frames.